The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Seam in Dallas.
Hi, Tom. I love your show.
Thank you so much.
I've been listening to you since 2001 from my Seattle days when you were on a little station there.
I appreciate you growling and prowling with us out here, man. Thank you. Well, listen, thanks for bringing us from Seattle to Dallas, man. Appreciate it.
Yeah, I love all the hosts. I love your show. I'm addicted to it.
It's Hotel California. It's wicked, isn't it, man? Thanks.
All right, Tom. Nice to talk to you.
Have a great one. Have a safe one.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. You are only responsible for your half of the relationship. There are two halves in every relationship, but you're only responsible for your half of the relationship. It's not up to you to control the other half, respect the other half, and there is always going to be peace in that relationship. Market-wise, let's take a look at it out here. We have the Dow Industrials up 53, NASDAQ down 3, S&P's up 1.5, gold contract up $2.30, trading at $1,290 an ounce. Silver down 4 cents at $17.45. Platinum off $3 at $9.72 an ounce. Copper down 4 pennies at $2.05 a pound. Light sweet crude off $1.79, trading out at $46.25 a barrel. Bonds, the 10-year note up 7 ticks, 132.09. 30-year bond up 1 full point, 170.08. King dollar up 55 ticks, 94.73. The euro is at $1.12, and the yen is trading at 104. My phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the markets, folks, what do we have? We got some amazing bear market action. So this is what you have, folks. Check it out. Dow Industrials right now are up 60. They were down 177. Gold was up 30. Now it's up $1.80. The King dollar was up 700 ticks. Now it's only up 65 ticks. Gotta love it. Here we go. Check it out. You're going to see volatility, and it's here in spades. Market deviant. Bottom line, can you spell ABC down? Because that's what we have, folks. This market is about as sick as you can get. It's broken the B point, has the volume behind the move. You're going to see an exciting close out here. So check it out. The SPY, what do we have? SPY gets down to a price point today of $205.59. We're trading at 207.98. You've done 111 million shares, so what you're going to see out here, the B point on this is 125 million. The low of the B point, which is the break, is the $206.91. So right now you're over that by a good a buck. Bottom line, what I expect you're going to see out here is this. We're not going to get below it by the end of the day. What we are going to get is you're going to get selling into the close. This is about as deviant as you can get. This is bear market action, folks. That's the bottom line. That's your Dow. The composite. We go take a look at the composite. This is what we have into the composite. Composite today got down to a price point of 4,788. Rejected that level. Right now, you're only down 2 points. The B point on the composite is 48.11. You're going to have higher volume at these lows. We're going to be right back to these lows. NDX 100, 3 Qs. Same setup in the NDX 100. NDX 100 right now has already done 25 million shares. Your B point on the NDX 100 is $107.24. We had 24 million there. And what does that set up? So the Qs are at 107.73. You still get that price projection down there at the lowest swing point of 104 to 10. It's 105 to be exact. Bottom line, the swing point's 104.54. If we go back to the SPY just for a second so I can give you that swing on the SPY. The swing on the SPY, folks, is 203. That's your ABC structure on the way down. The swing point itself from the 19th The high of that is 204. The low is 202. Gold contract. You talk about wild, man. Check it out. So gold today was up 30 bucks, folks. Right now, you're only up $1.20. We've done 319,000 contracts. So what we've done is this. You've taken out all the points, and you get volume. Bottom line, it's backing down. You're going to be right back topside. You get a high volume bar, and markets don't end on high volume. If we go over and take a look at the GLD, what you're going to see with the GLD is this. GLD is an additional ABC structure on the way up. Blew away the B point, blew away with volume. The GLD has got to a price point of 125.67. We've done 20 million shares thus far. That is a price projection of 138 in the GLD. Bottom line, once again, higher prices coming at us. Now, bonds. Let's go over to the bond market. So, 10-year note first. What do we have with the 10-year note? 10-year note out here got to a price point of 132.22. Has done 1.3 million contracts. Same type of setup there. You have higher highs with volume. Bonds are going to be back topside once again. King dollar. This is a trip in itself. This king dollar deal, man. So picture it today. What you had, folks, is that gold was at highs and king dollar was at highs, and then they both sold off simultaneously. So king dollar. What do we have with king dollar? King dollar got up to a price point out here today of 95.53. Couldn't handle the high. Didn't get to the downdraft. The downdraft that king dollar had to get to, number one, is 95.64. It only made it to 95.53. And the danger, this is what's really intense here. The danger, folks, okay, is that when you don't make a swing point, and you do have some juice underneath it, which we had, bottom line, guess what? This thing is going downtown to 93.88. I expect what you're going to see in this contract here is going to go run into the May 3rd swing low, which is 92. Big numbers all over the place. And what I expect you're going to see coming into this close out here, and this is where this thing is going to really, rock and roll big time, is that right now you get the Dow Industrials up 67. You get the NASDAQ is going to go positive any second. The E-minis just went positive. I don't expect you're going to see this coming into the close, though. And it's not that it's going to sell off a lot. It's going to sell off just enough to keep the bulls excited and to keep the bears nervous. That's how this thing is shaking out right now. If we go over to the silver contract and we take a look at silver, what we have with silver right now, silver got to a price point today of $17.88. You had 76,000 contracts traded. Right now, you're at 1732. Bottom line, that, once again, will be right back topside. Our phone number is 877-927-6648. Let's go to Mike in Pennington. Hey, Mike, what's going on?
How are you doing today?
I'm doing great, man. Yourself?
Good. I've been listening to you for 16 years. I've been a subscriber on and off. Right now, I'm subscribing with Steve. And fundamentally, I believe the gold should go up a lot, especially knowing he talks about the debt ceiling being raised every year. That's a whole other story. But the Brexit thing, when Scotland left the European Union, not too much happened.
Hey, just stay with us, Mike. We'll bring you right back, all right? Stay right there, folks. We're coming right back. Dow Industrials right now are up 70. NASDAQ is flat. S&Ps are up 2.5. Gold's down $1.50. We're going to be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We have the Dow up 76, Nasdaq's flat, S&Ps are up 2.5. We're talking with Mike from Pennington. Okay, Mike, go ahead.
So anyway, as I said, I've listened to you for a very long time. So when something doesn't make the target and then fails and then turns around and comes down, normally that's a short, in which I've been hearing for a long time. And with timing the trade, that's what we normally would happen. So the gold contract didn't make the target. You said it was like 1323?
No, 1313, wasn't it?
13. You said 1313, or you said 1323 yesterday?
No. But it has volume behind the move.
Yeah. No, it looks good, but it's kind of scary how it came back down $30.
Yeah. See, so I can totally understand, the scariness. Now, this is where this gets deviant. I happen to kind of like it. And so what you have is this. This whole run-up since January hasn't really been bought, hasn't been, people just keep selling it. So, yeah, they sold it today. But, we get higher price and we get volume behind the move, man. So, yeah, I think, you can pull back to, 1273 probably right now. But what you have is that if you take a look at, and this is where the context of really looking at a lot of different, metal stocks, if you look at Franco-Nevada, it's not backing off. If you look at Royal Gold, it's not backing off. Both of those indications are that, guess what, we're going higher, man. So. Right.
Okay. I had quick fingers this morning, thank God, because all my leveraged products I got out of today.
Okay. Good for you, man.
My regular stocks, equities I have holding on to. But yeah.
Yeah, see, because the regular ones, now this is, so I can, if you had those leveraged products, man, let me just see what NUGT, watch this. This is going to be like a crazy hit. Yeah, you went from 119 to 101. But you see, this gets interesting, too. When you pull some of these up, folks, what you're going to see is that they only, even the backing off was still higher than yesterday, man. So that's how a lot of the actually equities are, too. But there's no doubt the volatility is out there. What was really different out here, for sure, was that this morning, and when I was interviewing Andy yesterday, if you remember, he was saying that, yeah, he thought the dollar could move at the same time. And this morning we did have gold up 30, had the dollar up 700 ticks. They both gave it up. You know, hey, listen, I like that market, you know, and what does happen, folks, the volatility in the gold market is vicious. There's no doubt. And
Yes.
they don't want people in gold, period, you know, so. Cooking,
Right.
brother.
Thanks. Take it easy.
Have a great one, man. Have a safe one. Now let's go over to our man, Mr. Andy Hecht, as we do every Tuesday and Thursday. Andy's got an outstanding show right here at TFNN, 5 to 6 Eastern Standard Time. Now remember, folks, no matter where you are listening to the program right now, check us out on your cell phone, okay? The HD quality video is phenomenal on Tiger TV. All you do is you go to TFNN.com in your browser on your phone, hit Tiger TV. You're going to get great HD quality video as well as audio. Andy also has a great newsletter. It's the Technomental Commodity Report. You can test drive that 30 days absolutely free. The way you do it, go to TFNN. You hit newsletters, you hit trading newsletters, and Andy Hecht tonight is going to have Dennis Gottman on for an hour. They're going to be growling and prowling out here with you tigers and tigresses. Andy Hecht, what's going on?
Hey, a little volatility, huh?
Oh, man. I'm telling you.
If I didn't have any hair, I would have no hair.
There's no doubt, folks, and you know, the volatility out here today has been phenomenal. There's no two ways about it.
It really is. And you know what? I agree with you today. I mean, I will tell you, I think that gold pushed up, made a new high, came back down. Listen, going into this Brexit, you know, look, the way I look at markets, Tom, you know, and I'm not as technically driven as you and a lot of others in the den, and that's great, and that's what makes a market.
Sure.
And that's what's all interesting. But to me, markets are very often a reflection of the political and economic landscape of the world, what's going on, and what we saw today in the UK with the assassination of this politician shows how high emotions are in this referendum next week. And, you know, what we're going to see in markets is crazy. And we're going to see the central banks intervening. I kind of smelled currency intervention around the European close with these sharp reversals in markets. And I think we're going to see a lot. I think they're on the sideline. The treasuries, the central banks, they're all, you know, in the interest of stabilizing markets. We're going to see a lot of kind of strange moves.
There's no doubt. There's no doubt. And, you know, what happens, folks, is that when you get moves like this, you never know whether central banks do intervene or don't. What we do know is that on a currency level, they absolutely do. I mean, that's a normal situation. You know, I'm trying to figure out, you know, yesterday when I was interviewing you, you were talking about the dollar going up with gold, and this morning when Tommy and I were doing the program, it's like, oh my God, look at this thing. And then,
I know, it was crazy.
And
right?
then they both gave it up. Then they both gave it up. You know?
Right. You know, I've been writing an article that'll be out next Monday, just about gold and about markets and stuff.
Yeah.
And what I did is I kind of looked at every single currency, gold in every single currency.
Sure.
And the bottom line is telling me, you know, when we compare one currency against the other currency, we're in the world of currencies. But if we compare gold against every currency, gold is just a skyrocket higher. You know, it's up like 30% in British pound terms. It's up 20 some odd percent in dollars, 20 some odd percent in euros. It's up in Aussie dollars. It's up in every major currency. It's up in yen. And what does that tell me? It tells me that the faith in currencies is going down.
Yes.
Big time.
Right.
The
Well,
faith in fiat currencies.
And what
So-
you had yesterday, too, so you'd always remember, folks, okay, the way these ETF structures work is that you get to a higher high in the ETF. The ETF itself has to come in the market and buy more stock and buy more physical gold. And, you know, last night after the close, the GLD had to come in and buy 2 metric ton. That's a lot of gold.
Right.
You know, I
It's a
mean,
lot.
it's not a huge amount. It's like 64,000 ounces, but that's still a lot of gold, man. Do you know what I mean?
But I was watching the market last night at about 10:30, 11 o'clock my time, which is, you know, kind of late your time,
Yeah.
1, 2 a.m. And I was watching the Asian, very early European trading. And Tom, I mean, the thing was rocking all over the place. So there was a lot of gold bought last night, a lot more than 2 metric tons. I'll tell you that.
Oh yeah, no, I'm just
Right.
Specifically, what happens is that the ETFs have to tell you what they bought or sold. So
Right.
you know,
But it's reflective of also, you know, the what the funds are doing and what other individuals and, you know, so a lot of action. We're going to see this action until the vote next week. You know, just put on your seatbelt because this guy tomorrow. Don't you have a quadruple witching tomorrow?
Yeah, we do.
Oh, it's going to be wild. I mean, look, we see it in grains. By the way, sugar. You know, one thing that the central bank, a couple of commodities that the central banks are not going to screw around with here. Sugar traded over 20 cents today.
Yeah, look at that. Yeah.
Sugar traded over 20 cents. Coffee is strong. You know, the grains came down today, but the grains came down, you know, they're coming down from very high levels. The very interesting thing to me is that platinum made an all-time low against gold today. It traded at over $330 discount to the price of gold.
Pretty wild here. Stay right there, Andy. Andy and I coming right back, folks. Our phone number is 877-927-6648. Dow Industrials are up 92. Nasdaq's up 5. S&Ps are up 4.5. We're going to be right back, folks.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Today, many commodities are trading at relative lows. And now you can take advantage with Everbank's new limited-time, 5-year, market-safe currency comeback CD. This indexed and U.S. dollar-denominated CD offers 100% principal protection and is based on the equally rated performance of currencies of Australia, Canada, Chile, Mexico, and South Africa. These 5 countries are especially rich in commodities, and their respective currencies are poised to do well should commodity prices begin to recover. Keep in mind that no APY, or periodic rate of interest, is paid on the CD. Don't miss out on this innovative new financial opportunity. CDs must be opened and funded by the upcoming July 14th deadline. To apply online and learn more about the CD, including product terms and disclosures, visit everbank.com/TFNN now. This advertisement is sponsored content. Everbank is a member FDIC.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We have the Dow Industrials up 99. You talk about wide price spread, folks. They were down 177. Nasdaq's up 8. S&Ps are up 6. We have the gold contract down $4.30. That was up $30. We're talking with our man, Mr. Andy Hecht, and we are talking commodities, folks. And, of course, don't forget, from 5 to 6 today, Andy's got a great guest, Dennis Gottman. He's going to be on there. They're going to be growling and prowling, talking about all these different commodities, and you can get it right on your cell phone, TFNN.com, hit Tiger TV.
And in the second segment today, in your second hour, you have our friend from Everbank on, Chris Gaffney.
That's right, and we're going
to be which will be great because getting
they,
his perspective on the central bank stuff yesterday will be awesome.
No doubt, and they have a new currency comeback CD, folks, and it's going to be pretty cool because it's the Aussie, it's the Canadian, it's the peso, it's the rand. All these currency, these commodity currencies.
The commodity currencies,
exactly.
Absolutely, great way to play it, and they've been depressed. So
yeah,
it's good.
Big time.
It's definitely an interesting product. They always come out with very interesting products.
They do.
No
it's
question
amazing.
about it.
And so as we're talking, folks, you can just check it out right in the front page of our website at TFNN, right under the carousel. Go ahead. Sorry, man.
So no, that's okay. We're going to talk about crude oil a little bit. So crude oil, man, we were talking about it last week, and I was pointing out to you how I was really concerned because the product prices were really weak.
Right.
And, even today, you'd think with crude oil coming down almost $2, maybe we'd have a little bit of a respite and the products wouldn't go down as much and perhaps, the crack spreads would go up. But we're only seeing a 38-cent rally in the gasoline crack spread.
Okay.
And that's at 15.46. I want to remind you, last year at this time, we were at $25 in that crack spread.
Yep.
In the heating oil crack spread, we're actually down 45 cents today, with heating oil down almost 6 cents per gallon wholesale. So real weakness. That crack spread was about $20 last year at this time. So that's bad news for refining stocks. It's bad news for crude oil. Crude oil's stuck between bullish and bearish things here.
Well, it had a great run anyway, right? It just could be a normal retracement, right?
Absolutely.
Yeah. Right.
I mean, I've been looking for $45. I think the range is 45 to 55. There's some very bullish things out there. U.S. production is lower. And although the market was looking for a 2.3 million barrel withdrawal from inventories this week, we only got 933,000, but we still got a withdrawal from inventories this week.
Right.
You know what I mean?
And
so production's going down.
Sure. And if you picture this, a 0.38 retracement from the lows of this contract, which is like 31, to the highs, it's still only $44. That's a bullish indication, folks, okay? A 0.382 retracement is nothing. That's a normal retracement. You can do a 50% retracement at 41.67 and still be bullish. So
absolutely. Yeah. But one of the things that's bothering me about oil is that gasoline now, in the peak season for driving in the U.S., is weak. And why is it weak? I think that there's a couple of things going on. It's either that inventories are too high, and inventories of gasoline are high, or demand is low, or maybe a bit of both going on here. That's kind of all I can see. I think that the refineries cranked out a lot of gasoline this year.
Okay.
And perhaps, maybe it's the same thing that's affecting airlines. Maybe travel is going down a little bit here. People are staying closer to home for economic reasons and also for terrorism reasons. Airline stocks have gotten trashed. We talked about that earlier in the week. And quite frankly, with oil prices, airline stocks should be doing pretty well. But you have a U.S. State Department issue with tratal to Europe. They put out a special memorandum,
and that's unusual, right? That's a big number. You're talking about summer travel to Europe. That is when summer travel to Europe goes. You know what I mean?
Right. Yeah. Exactly. And then you have all the kids who are going to go foreign exchange students in the fall semester, and their parents are probably having second thoughts about that with things that are going on over there. So you're having less travel just in general, and I think that could be weighing on gasoline as well.
Yeah.
It just feels that way to me.
Yeah, for sure, man.
Right. So it's kind of a paradox. Gasoline should be doing very well here, but it's not. And that weighs. And as you say, hey, we rallied from $26 to $51 on oil.
Exactly.
Coming down $5? Come on. Even gold today, it's the same thing. It went up to what? To almost $13.20. So we're back at $12.85. I got to tell you, we were 1,200 a couple of weeks ago.
Well,
so these are just very wild markets.
And if you look in the GCQ, when we were talking with Mike from Pennington a little bit ago, and what the gold contract had done, folks, okay, it did a small A to B yesterday, and that projection was 13.13, and it blew way over that. But the first leg up gave it 13.16. And now what it did is it pulled all the way back. So check out what it did. It pulled all the way back to its strength from 2 o'clock yesterday afternoon, where it had 16,000 contracts, and then we pulled into that, with 5,300 contracts. So I like that, I mean,
Right.
I would have much rather that gold stay over those highs. That's for sure.
Let me just put something out here for you to think about. And this is really long-term perspective.
Yeah.
I think that the volatility in gold, even on a day like today, is so much less than we've seen in previous years. When I ran the gold trading business for Philip Brothers and for Solomon Brothers, the gold price was between $300 and $400.
Right.
It just kind of didn't move, right?
Right.
And a big day was $20. All right,
which is huge.
That was a big day. That was a day like today. We would have a $20 move, and that was. And by the way, that happened.
But that's only
once a month.
on a $350 gold price, right?
That's my point.
Right.
Today, the gold price is what, 4 times bigger?
Right.
We should be having $80 moves, but gold doesn't move $80 in a day. It's very interesting, and it feels managed to me. So actually, I look at this volatility on kind of a percentage basis. If I look at actually the historical volatility is low.
No, that's the way to do it. And what also happens, folks, is that you want to remember that this is a market, meaning that you're in the currency market. The central banks are concerned about it. Central banks in themselves do not want gold to go to the moon, because gold going to the moon gets everyone nervous very quickly. Okay,
well,
so
it's a direct indictment of fiat currency.
It is, and there's never any proof that they can come in and they can take the gold market down. I take all of that kind of with a grain of salt. But the reality is that guess what? If you're going to be in this market, you got to be ready for something like that. So
yes, you do. You absolutely do. And you know what? Central banks, you have to remember, they hold over 30% of the gold ever mined throughout all of history in their vaults.
Right.
And it's very easy for them to turn around and sell 50 tons to stop the price from going up and then buy it back. And we never hear about that because it happens quickly. And listen, I executed some of those orders for central banks in my years as a bullion dealer.
Right.
We never hear anything. The bullion dealing community is very tight-lipped about it. It never shows up in transparent numbers. It's just the way of the world.
Right. And so where I fall right back on the bonds. It's like, okay, man, guess what? Free money's still out here, folks. They couldn't, the bond market, they sold down a bit, but guess what? It's still high and it has volume.
They can't crack that bond market.
It's intense. It's intense. What about one more? Yes?
Sure.
Awesome, man. Stay right there. Andy and I are coming right back, folks. Our phone number is 877-927-6648. Dow's up 93, Nasdaq's up 6, S&P's up 5.5. We're going to be right back, folks.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. We have the Dow up 99, Nasdaq up 8, S&Ps are up 5.5. We're talking with our man, Mr. Andy Heck. We are talking commodities, folks, and of course, don't forget, 5 to 6 tonight. Andy's got a special guest on, Dennis Gottman. They're going to be growling and prowling out there with you, talking commodities in a big way. Get it right on your cell phone, TFNN.com. Hit Tiger TV.
Pretty good day to have him on and talk commodities.
Oh, it's a great day, man. I mean,
timing is everything, right?
Well, and you know what? It's a great day, but it's a hard day for any analyst out here. You know,
Absolutely.
that's the other side of it. I mean, you know,
it's a very hard day.
It is, man. I mean, you're talking about market swings that are incredible. So
I would call it off the hook.
Yeah, and it's great though. It's a perfect day to have him on. There's no doubt.
Absolutely,
it's just that, you know, it's gonna be a tough one. That's for sure.
Yeah, well, we'll plow through all of the different sectors, and we'll see what he has to say. He's always very interesting to me on the agricultural commodities. I find his analysis there pretty good.
Cool.
I want to talk a bit about natural gas, which looks like it put in a bearish key reversal on the daily chart today. The numbers came out. There was an injection of 69 billion cubic feet today. The interesting thing here for me continues to be the same trend we're seeing due to low prices this year. As of today's numbers, 573 billion cubic feet have been added into inventories.
Okay.
And last year at this time, 972 billion. So we're 41% below last year's. That is fundamentally bullish, but this is a wild commodity. This thing could go to $2 and it could go to $3. And you know what? It's sitting right in the middle.
Yeah, it is. It is.
No question. I mean, this thing's tough. The thing is, it's getting a little bit overbought here. On the short-term charts, it looks like the stochastic is up at around 88. You know, we've kind of been sitting up here near the highs. We're still within, 5 cents of the highs, but wild trading market, certainly a wild. And a lot of people always ask me, Tom, should they be trading this UGAS or this DGAS, these leveraged ETFs? And I always say they're good products to trade if you can't go to the futures market. And sometimes they're safer than the futures market. But the discipline with those kinds of instruments is close them out at the end of the day and take a fresh look every new morning. Because when you leave them in your portfolio, they tend to become dust collectors. And these are ugly dust collectors, these leveraged ETFs.
Yeah, you can't. They're daily investment vehicles, because what happens, folks,
intraday.
Once you do the math on it, okay, if you have a choppy market, both the bull and the bear position will lose money. Has to. Mathematically, it has to.
Absolutely.
Yeah.
But they will replicate action intraday.
Oh,
so
they're awesome intraday. They're awesome intraday, and they're actually awesome also. If you catch a trend, they're awesome.
Yes,
of
course.
But, we want to keep that part out of it so we can keep it clean, folks.
Yes.
And,
yes, I don't want to see anyone get barbecued on them.
Exactly, Q. Exactly. Even though it's barbecuing season.
It is grilling season, right? So let's talk about that a minute.
Yeah.
Very interesting what happened in the beef and the pork markets.
Okay.
The beef market's coming down like a stone. The beef market is coming down. Those steaks are cheap. So load up.
So
we're about $1.13 a pound.
$1.13. Oh, look at that. Yeah, well, hit $1.11 today, too. So this would be interesting if it breaks these lows out, huh?
Right, exactly. But look at the hog market. That's strong like a bull. Well, it's like a hog, like a boar. We'll say that's strong like a boar, like
so
a wild boar.
What is the correlation when you do these correlations between...
Exactly. Intercommodity spreads. That's exactly where I want to go.
Okay.
You know, back in October and November, the long-term norm on the pork beef spread is about 1.4 pounds of pork value in each pound of beef value.
Okay.
Back in October, November, when beef prices were high and pork prices were cheap,
yeah,
we went to 2.5 pounds of pork to 1 pound of beef.
Really? Wow.
Now, in August, we're at like 1.27 to 1.
So
we've gone from way over
spreads so
to
much.
way under.
Yeah, right.
Right. Now, it's close enough that I wouldn't be selling pork here, selling hogs and buying cattle. But let me tell you, it goes down to below 1 to 1. Or, you know, if pork comes to parity against beef, I'd certainly be selling a little hogs and buying a little beef, because those spreads tend to work very nicely, particularly in agricultural commodities. Now, beef is coming down, cattle are coming down because of these high soybean prices.
Right.
And I think that puts a lot of pressure on the feed.
Yeah.
And animal protein producers, they're saying, hey, so the cattle is a little bit underweight. I'll still send it to slaughter. This way I don't have to feed it.
Right.
And it creates a glut in the market now. But next year, this time, you could have a real a real shortage in the market. So very interesting. Lots of volatility on the horizon in these markets. But happening at an interesting time of the year, the heart of grilling season, or actually the very beginning of grilling season.
Yeah, there's no doubt, man. And in the context of, never mind, are we going to have a weather market in the grains, right?
Oh, yeah. Well, that's still Mother Nature only knows whether it's going to be a really hot, dry summer. And, whether soybean, you got to watch soybeans. Soybeans, the leader there. I kind of like wheat here because it's very cheap, and there's been some weather issues between France and southern Russia. In the U.S., we're the world's largest producer of corn and soybeans, and we're also the world's largest exporter, and that's why the dollar also affects corn and soybeans. But in wheat's a very highly political commodity. It's produced all over the world. We're a major producer and a major exporter, but we're certainly not number one. I think the EU is the number one producer of wheat these days, but Australia is a big producer. Canada's a big producer. You have production all over the world, India, China.
When they say weather market, is that specifically just always heat, or is it heat and or too much rain?
Well, you could get floods. That's bad.
Okay.
It's like the porridge has to be just right.
Yeah, no, I was just curious.
You can't have too much water. Right. You can't. Drought is the worst.
Drought is the worst. Okay, drought makes everything sandy. Right.
Right. It decreases the protein in the grains. It's a real problem. So we have to wait and see what's going to happen in the coming months, but we have had quite a bullish start to the season, certainly not like we've had in 2013, 2014, and 2015. And, agriculture is on fire. Look at that sugar. I mean, it's doubled in price.
It's doubled in price. It's cracked sugar.
Doubled in price. And it's the second year of a fundamental deficit in the sugar market. So my target for sugar is about 23 cents. That's the 50% retracement of the move from 36 cents per pound back in 2011 to 10.13 cents last August. And, if we can break above 23 cents, then, we could have some serious fundamental sugar problems. And sugar is all about Brazil, because Brazil is the largest producer of cane sugar, of world sugar, the unsubsidized sugar. So, we have to keep our eyes on weather in Brazil, certainly. The other interesting one here, copper. Copper's doing like nothing.
Yeah, it caught the bid and then it gave it up pretty quick, man,
Well, it caught the bid with everything last night. I expect some volatility there. $2 key level. It's got to hold above there. If it can, we can see it back up to 215, 220. But, hey, lots of volatility.
No
All
doubt.
I could say is strap on your seatbelts. It's going to be wild.
Strap on the seatbelt, baby. And listen, folks, right here at 5 to 6 o'clock tonight, I'm Mr. Andy Hecht. Great program. Get it on your cell phone, TFNN.com, hit Tiger TV. And as you're coming over to TFNN, folks, Test Driver's newsletter. You go to newsletters, You go to trading newsletters, you'll see the Technomental Commodity Report. You can get it 30 days absolutely free. Andy, you have a great one, a safe one. Of course, we look forward to the program at 5 o'clock, man.
Thanks so much. I look forward to hearing you and Chris.
Okay, man. Totally.
Thanks.
Have a great
Bye.
one, man. Have a safe one. You stay right there, folks. We'll be coming right back. Dow Industrials right now up 100. You get the NASDAQ up 8. S&Ps are up 6. We're going to be right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. We have the Dow right now up 99, Nasdaq's up 9, S&Ps are up 6.5. Let's go take a look and see where we're going to come out volume-wise. So right now you're at 708 million on NYSE. So yeah, maybe you'll hit 9. It's going to be hard to hit 9 though. So that would be light of volume if we don't hit 9. The NASDAQ composite, however, guess what? You have high volume. We're going to be hitting 1.9 billion in the composite, and what that sets up is you broke a B point, did it with volume, turn around and be a complex ABC structure down. And what a complex means is this, folks. You took out the B point, which was a low of the Monday, let's say Wednesday. Today's Thursday, sorry, of Tuesday. Take that out with volume. You get back on the other side of it. You'll see volume contract again. You go right back down into these lower prices. So we go over, let's look at the NDX 100, where that sets up. NDX also set up the same way. You're up 30 cents. You're trading at 108.02. You've broken that with 29 million shares. The small caps, we go over to the small caps. Small caps also did it. You know, the small caps can't get out of their way, actually, which is kind of interesting. The 114.38. And the lows of yesterday was 114.46. It broke the B point, broke it with volume. Go over to the Dow. The Dow, no doubt, point-wise, big numbers here. We were down 177, now you're up 98. The Dow got down into the 17,471, and we'll see where that volume shakes out. 471. So what the Dow did do, let's go see what the traded was on the 19th. The Dow had got down to its swing point, but it got down to the high of the 19th and rejected it. So you go back and we take a look at May 19th, and we see, what do we have? May 19th. Okay, so here's the number. This is going to be cool going into the close out here. If the Dow does less than 949 million, that would be a rejection of the highs of the lows in the Dow Industrials. So then we'd have some divergence. What the divergence there would be is that, yeah, the Dow could move higher. The S&P, however, does not have that because what, well, here, make sure it doesn't. Let's see here, 1 second. Let me see this cash S&P. So the cash S&P got down to 2050. Yeah, it didn't. So it's 2044, the high of the cash of the S&P. So that sets up that the S&P can still get down into those lower prices. The gold contract is trading down 510. That's at 1283. That's quite a move, no doubt, in the gold contract. What we have from highs to lows out here, we went from 1318. That was the high out here. We're at 1283. Now, that being said, the low of yesterday was 1281. You know, so volume, dynamite volume. You did 329,000 contracts. That's saying you're going to be back topside once again. The GLD, that broke the B point with volume. That's going to be a complex ABC structure. The GLD would have a price target of 138. Bonds are the number, folks. That's the free money still out here. Bond market is always much harder to push around because it's the largest market in the world. And bonds out here hit a price today of 172.17. Closing, let me see this closing. Yeah, this is a closing high also. When you take a look at the actual rate structure, the 10-year is at 1.5. The 30-year is at 2.3. 2.3 for 30 years. Isn't that amazing? Now, if we were in Japan, this is what's really sick, folks. The 30-year rate in Japan is 13/100ths of 1%. Yeah, give me a break. Stay right there, folks. We'll be coming right back. Dow Industrials up 99, Nasdaq up 10, S&P's up 6.5. We're going to be right back, folks.
The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Kevin in Orlando. Hey, Kevin, what's going on?
Hey, I'm doing great. You know, I am addicted to TFNN.
We appreciate you growling and prowling with us out here. It's a great network, man. And I want to thank everyone out there, you know, for making it a great network.
Well, it's great because I do outside sales, so I get to have the station on my phone the whole day. And when I go pick up the kids from school at 3 o'clock, they all love it and giving the old wow. Educating the kids at a young age is a good thing.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Become a white magician. All the magic you possess is based on your word. You can cast spells all the time with your word, with your opinions. You can either put a spell on someone with your word, or you can release someone from a spell. It's a tough one to understand. Market-wise, let's take a look at it out here. We have the Dow Industrials up 92. That's after being down 177. What do you got with the Dow Industrials? Dow Industrials go into the May 19th swing point, gets to the high of the swing, rejects it. We do 891 million versus the swing of 949. Dow is going to, well, it bounced, wants to bounce higher. NASDAQ Composite down $9. S&P's up, NASDAQ Composite up $9, S&P's up 7. Divergence, folks. Both of those lower price, have volume. We'll go through those. They still want lower price. Gold contract. You talk about volatility. We're up $30. We closed down 470. What does it have? Higher price, huge volume. Gold's going back topside. Silver. Same setup in silver. Silver was up at the $18 level, closed out at $17.22. Has the volume at the highs, wants higher price. Copper. Copper down 3.5 pennies at $2.05 a pound. Light sweet crude got clocked. That's down $2, $46. That looks like it's making its way down to the $44 area. Notes and bonds. 10-year note up 2 ticks, 132.04. 30-year bond up 22 ticks, 169.29. Both the notes and the bonds want higher price. Free money, we have it all over the place. King dollar. King dollar, high volatility also. That was up 700 ticks, ended up being up 10 ticks, 94.69. King dollar wants lower price. Bottom line, it couldn't make it to its swing point, which is a bearish occurrence. Had decent volume behind it, but guess what? You can't make it to that swing point. You give it up like that, you're going to the lower swing point. Euro. Euro is trading at $1.12, and the yen is trading at 104. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have in there? So here's the deviance, folks. Your cash S&P got down to 2050, rejected it, closed at 2077. If I put the SPY up, what you're going to see is this, is that we got to lower price. You had higher volume, we did 145 million. The B point on this ABC structure on the way down is $206.91. We broke it, and we broke it with volume. This is going to set up a complex ABC structure on the way down. So you broke the B point, had the volume on the break. You know, can we bounce up to the highs of yesterday? Yes, you can, 209.36. Bottom line, though, you got a lower low. You have the juice behind it, huge volume. This is going to make its way down to the 202 to 204 area, and we're at 208.37. NDX 100, same setup in the NDX 100. What we have with the NDX is this. You did 30 million shares. You broke that B point, which had 25 million. Same type of setup, complex ABC structure on the way down. That wants to run into the 104 to 105. Now, Dow Industrials is different. This is why. Here's the divergence. Dow Industrials got down to 17,471. So it got down to the swing point. The swing point we're talking about is on May 19th. The high of the swing was 17,514. And we did 891 million versus that swing point of 949. It rejected it, had lighter volume, and that sets up that the Dow can actually get up into, it can go up a couple hundred points. You know, we'll see where that shakes out, but that's how that sets up. Gold contract. What do we have with gold? Gold had the wide price spread, accelerated volume, all of the above, folks. We did 332,000 contracts. You're going to see gold go topside ASAP. We broke the swing points. We broke them with volume. Gave it up on price. The GLD is an ABC structure on the way up. That got up to a price point of 125.67 today. Did 25 million shares. Blew away the B point of 19 million. That price projection is 138 inside the GLD. Bonds. What do we have with the bond market? Bottom line, notes and bonds want higher price. The 10-year note, we did 101.4 million contracts. You got to 132.22. You can pull back a little, but that, once again, wants higher price. The 30-year bond is just to the moon. It's pretty amazing watching this 30-year bond. So the 30-year bond today got as high as 171.07. We've done 309,000 contracts. We closed at 169.29. That, if we put up the continuous contract, we're at 171, And what you're going to see is that you are at all-time highs. That's the bottom line. Yield-wise, this is where we stand. On the 10-year, you're dealing with a 1.5. On the 30-year, this is pretty amazing. This is our U.S. bonds. On the 30-year, you're dealing with a 2.39. Check that out. It's under 4%. Under 2.4%. King Dollar. What do we have with King Dollar? We take a look at King Dollar. King Dollar gave it up on spades out here, as did the gold market. They both moved the same way today, which is really unusual. I suspect that'll change, but it didn't change today. So this is what we have. King Dollar got to a price point of 95.53. You did 40,000 contracts. It closed out at 94.69. Now, this is the problem with King Dollar. King Dollar didn't make it to the downdraft that had been created out there on June 3rd. The high of that is $95.64. What happens, folks, is that when you get an acceleration of the volume, which we did today, it was a nice move, and you don't make it to the swing on a counter trend bounce, that's a problem. So now what we're going to see is that how is it going to go into the lowest swing, which the first lowest swing is the low from last week, which is 93.38. You know, we'll see how that shakes out. But it looks to me like not only it's going to get into that area, I expect what you're going to see is that we're actually going to get into the 92 area. And the 92 area is the swing low from this contract, where the last contract we were trading at 91.88. That's where this baby looks like it wants to go. Oil, we take a look at the oil market. Oil came down. It had wide price spread, had the volume, had all of the above. We did 478,000 contracts on the way down. You're trading at $46. This is making its way down to the $43.65 area. You stay right there, folks. I'm Mr. Chris Gaffney. He's going to be coming back. We're going to be talking about the new Market Safe Currency Comeback CD from Era Bank. You can check it out on the break. Just go to TFNN. You're going to see it right on the top of the carousel. We're going to be walking you through this CD. Stay right there. Come right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We had the Dow Industrials finish up 92, NASDAQ up 9, S&P's up 6.5, and now we're going to go over to our man, Mr. Chris Gaffney. Chris is the president of EverBank World Markets. You've heard him many times right here at TFNN. We're always so lucky to have him on right around the Fed meeting time. Now, as you come over to our website at TFNN, folks, check out the new launch that EverBank, we're launching it right here, which is a beautiful thing. So if you go under the carousel, what you're going to see, EverBank launches the new 5-year market-safe currency comeback CD. What we're talking about, the currencies we're talking about, folks, is the Australian dollar, the Canadian dollar, the Chilean peso, the Mexican peso, and the South African rand. And what are those currencies? Those currencies, folks, are commodity currencies. It's a free money world out here. The Federal Reserve decided that, I think the market decided. The bond market has been saying for quite a while that the Fed may want to go up on rates, but that bond market just keeps pushing those bonds higher. Chris Gaffney, welcome back to TFNN.
It's always a pleasure to be here, and yeah, I think the Fed cried uncle is what I think happened. They finally had to succumb to the market and actually brought their expectations down to really what the market's been saying for a while now.
It's amazing, isn't it? I mean, fundamentally, Chris, right? Looking at the rates of the rest of the world, it would seem that it was hard for us to go up, But, because the Fed said they were going up and, the economy's pretty good, it's like, okay, yeah, you're going to go up. And then all of a sudden the realization that doesn't make any sense, man. The 30-year bond, folks, in Japan is, 0.19 of 1%. It's like, oh, my God, right?
And what that does, with zero interest rate, look at the 10-year, look at the yield curves, there's no expectation of inflation. And really, the Fed and other central banks are trying to pump this market full of money, and really, you've got the printing presses on really a high drive right now. I mean, the printing presses are running overtime by all these central banks, and what that does is it leads to uncertainty. It leads to really a question on just how much credibility these central banks have, and more importantly, how much control these central banks have of these economies. It's starting to question it a little.
It's this, and there's no doubt. Sometimes when I'm thinking about it, I don't even want to let my mind run so far. Do you know what I mean? Because what it is that I'm saying to myself, and I'm a commodity bull, but every time I put this through my head, I'm saying to myself, you know what? When you have money that costs nothing, we know that there's only so many hard assets. Bottom line, that's where we're going. So let's talk about, you guys always come up with some great products. Let's talk about this product.
You bet, Tom. And we've had several calls from listeners of your show on our last issue, the commodity CD that we issued, and this is really kind of a follow-up to that. It's a different way to play the commodity markets, and really in a way that you're looking at currency returns. So the CD is a 5-year CD. The important thing is it is principal protected. So just like all of our market safes, there's no downside risk. You can't lose any of your principal by investing in this CD. And what we do is we take and value each of these 5 different currencies at the beginning of the CD, and then we compare the ending value of those 5 currencies, and they're equally weighted in the CD. So at the end, the upside performance on the CD is going to be tied to the performance of each of these 5 currencies. no upside, cap. So, you get all of the upside of these currencies, none of the downside risks. So
that's amazing.
It's a great way to play this this currency market. And these currencies that are involved, as you mentioned, are commodity-based currencies. I mean, you got Aussie and Canada, both mining, and Canada with the oil, Chile with the copper.
Yes.
I mean, one of the industrial
huge.
metals. Mexico and South Africa again with precious metals. So Mexico with oil. So it's a way to play the comeback of, in particular, really the mining commodities and oil.
And folks, so picture what happens here. Whether you have an IRA, if you're in the the CD market, the only thing that you're giving up on this 5-year CD is whatever your bank would give you on a 5-year CD, okay, which we know is, I don't know the exact amount, but I know it's hardly nothing, okay? So
yeah, and that's what we call the opportunity cost.
Yes.
And it's similar to the reason we argue. I wrote a piece the other day about owning gold and precious metals and how with interest rates staying at lower for longer, there's a real case to be made for owning precious metals because there's no opportunity cost. Well, this is the same thing. The opportunity cost you're giving up by investing into this CD is whatever the interest you would earn on a CD at a bank. So again, no risk, very little opportunity cost, and unlimited upside.
So the way this works, folks, the launch is today. To open the account, it's a minimum of $1,500. It's FDIC insured. You have plenty of time, folks. This is a great product. If you have a self-directed IRA, that's a great product for that because you're going to get your principal back. Bottom line, you're going to get your principal back. And if the upside is there, well, guess what? With no limit on the top of it. Now, that's a little bit different, and I guess we're going the full 5 years, which is pretty cool because...
Yeah, and that's the key. You do have to keep this money invested for the full 5 years. That's a very important part of this CD. You can't pull it out before the end of the term. But, again, for IRAs, it's so important to make sure you get return of principal as well as return on principal. So this is a way to get into that volatile market in an IRA. It's either IRA or non-IRA. You can put regular taxable money in also. $1,500 minimum. It really is a product designed to take advantage of these what can be volatile currency markets. And really right now, Tom, if you look at just like the commodities were at a low point and had some value, these currencies have been beaten up. I mean, these currencies are commodity-based currencies. They've been beaten up by the markets, and that's usually the best time to get invested is when they've been beaten up and they're rebounding. And we've seen them start to turn, and we think that this dollar and the commodities in particular are starting to the dollar is heading for downside, and the commodities are headed up.
Yeah, and yesterday, when Yellen was out there talking, folks, okay, one of the big articles on Bloomberg was Summers versus Yellen. And, the Summers theory, and this started in Japan, is that older, demographics, they save money, less productivity, and, that's lower rates on a continual basis. And, folks, if we have lower rates on a continual basis, guess what? Commodities are going up because too much cash is chasing that hard asset. You can go to our website at TFNN. We got it right on the carousel. You can hit that, or you can just give EverBank a call. Their number is 855-750-4051. Now, remember, folks, this is a limited time deal. The funding is going to be on July 14th, but call them right now. You can get it set up. And get yourself set up for the next 5 years. Chris, you have a great one and a safe one. Of course, we look forward to having you on again, and congratulations. It's just another great product that EverBank puts out.
We keep trying. Thanks again.
It's a beautiful thing, brother. Have a great one, man. Have a safe one. You stay right there, folks. We'll be coming right back. Our phone number is 877-927-6648.
Many commodities are trading at relative lows. And now you can take advantage with EverBank's new limited time, 5-year, market-safe currency comeback CD. This indexed and U.S. dollar-denominated CD offers 100% principal protection and is based on the equally rated performance of currencies of Australia, Canada, Chile, Mexico, and South Africa. These 5 countries are especially rich in commodities, and their respective currencies are poised to do well should commodity prices begin to recover. Keep in mind that no APY, or periodic rate of interest, is paid on the CD. Don't miss out on this innovative new financial opportunity. CDs must be opened and funded by the upcoming July 14th deadline. To apply online and learn more about the CD, including product terms and disclosures, visit everbank.com/TFNN now. This advertisement is sponsored content. Everbank is a member FDIC.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, swim lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the 3 hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. And don't forget, folks, you come over to our website at TFNN. You're going to see it right in the carousel lined up. This is for the Everbank 5-year market-safe currency comeback CD. So check it out. If you're in that CD market, great place to place some money for 5 years. Bottom line, as Chris said, it's the opportunity cost. But in a 5-year CD, I suspect it's not paying much. In fact, if we put up the 5-year note, the 5-year note right now is at 1.08%. Pretty amazing. Some of the let's go take a look at Oracle. Oracle come out with numbers after the close. Oracle closed at $38.64. It's trading up about 50 cents, $39.29. This is how the numbers go. The estimate was 82 cents. They made 81. They added 1,600 new AAS customers. Let's see what the revenue was. So their operating margin is 45%. Their revenue was $10.6 billion. That was the estimate. They took in 10.6. The estimate was 10.5. If we go take a look at how Oracle is set up right now, Oracle's at 38.64. The high up there is 42, which is about 3 months ago. We pull this back a bit. This has been in a consolidation for quite a while. It's the same price. It's the same price that it was in, that we were in going back to March of 2014. SWHC. Do I get the right symbol here? Smith & Wesson. Smith & Wesson closed at $21.75. That is trading at $23.21. Smith & Wesson, let's see what they're saying. Their earnings per share was 63 cents. The estimate was 54, so they made more than the estimate. Their net sales, the estimate was 214 million. They made 221 million, and it's trading up about $1.50. But this thing has been a dog. This is off its highs. Well, no, it's not that bad, actually. Well, yeah, it came down hard off its highs. It's down 30%. So the high was $30.44. That was in March, and this came down with some real volume. So this is going to be, I wouldn't get my head wrapped around this. $19 is where this baby wants to go. You know, once that thing broke down, with some big volume. You came off the highs with volume. 25 million shares on the weekly. You did an additional 12 million. That's where it bounced. So we'll see how it hits the 24.50. Yeah, you're 23.33 right now. Some of the higher volume stocks out here. This is what you had today inside the market. We had Advanced Micro was up 33 cents. You had Microsoft up 70. Symantec was up 79. Merck was up 141. The strength inside the Dow Industrials, this is what brought the Dow Industrials back. It was Merck. That was up 2.5%. DuPont was up 1.7. Microsoft was up 1.4. And 3M was up 1.2. This morning, you only had 2 Dow stocks that were positive out of the 30. That changed midday. Nike is still a loser on the way down. That was down 1.5. Boeing was off 0.6. Pfizer was off 0.1. Inside the NDX 100, what do we have? NDX 100, the top dog out here today, and this was intraday, was Viacom. Viacom was up 6.5%. If we go over, take a look at Viacom, what you're going to see is that this went topside in a big way at 3 o'clock this afternoon. It went from $42.97 up to the $45 level. And what that's all about is Sumner Redstone and his daughter Sherry. They canned the whole board. The bottom line is you're going to see a change. They took control back over CBS, Viacom, all of the above. That's going to be, it already has been a bloodbath. Bottom line is that that CEO is going to be out more than likely tomorrow morning. They got rid of the board today. They put their own folks in. And that's a big number, no doubt about it. Inside the rest, so that was the mover inside the NDX 100. Symantec was the second mover. That was up 4%. You had Liberty, Liberty, and was up 3%, and Baidu was up 2.7%. Baidu is a dead cat bounce. Let's go up and take a look at the DAX. So our markets, folks. We have divergence inside our markets, and what the divergence is this. Dow Industrials wants higher price, S&P, NDX 100, lower price. They both hit lows, broke a B point. You might get a small bounce, but bottom line is that it's a complex ABC structure on the way down. If we go over to the DAX in Germany, this is where this really sets up, which is pretty cool, releasing a huge amount of information. The DAX in Germany took apart its swing point, took it apart with volume. The swing point we're talking about out here, let's see, did it take apart the below 1, 2? Well, we took about the swing point of 97.37, 89 million shares versus 109 million. The 94.05, we took this one out too. We took out the lower one too, and I suspect with volume. What is that setting up? That is setting up, the DAX wants to go down to the October 11th high volume swing low. What is that setting up? That's setting up, that's where our NASDAQ also wants to go. So that is the DAX in Germany. We go over into the UK. We take a look at the UK. The UK intraday rejected lower price. We rejected the lows that were established out here on Tuesday. UK, we'll see what kind of a bounce we get, but the UK also wants to get down into this 56.72 area, which is that high volume swing low. And as Andy said, unfortunately, they get some heavy duty, violence going on over there too. Bottom line is that you have the Brexit, and One of the Labor Party lawmakers, unfortunately, got murdered today, which is such a drag. A 41-year-old woman, and she's only been in office like 2 years. A couple young kids, man, just makes zero sense. Bottom line, and the way that it's being reported at this particular point, it looks that it was done. Well, the allegation is that it was done by one of the groups that basically, saying that they want the UK to leave the British Union. So May 23rd, which is June 23rd is the vote, folks. So coming up to that vote, there's going to be high volatility, in spades. We go take a look at the euro itself. Let's go take a look at the euro. So the euro right now came down to a price point today of $1.11. It rejected that level. And see, that level is pretty cool, folks, because that level is where it went topside on the 3rd of June. What that's saying is that euro wants higher price once again. So you can expect the volatility to continue out here. The volatility in the currency markets today was phenomenal, and I expect you're going to see that tonight as we open up in Australia and in Asia. Stay right there, folks. We're coming right back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. And folks, don't forget, right after my program tonight at 5 o'clock, 5 to 6 Eastern Standard Time, my man, Mr. Andy Heck, is going to be out here growling and prowling with you as he does every Tuesday and Thursday. He's got a great guest tonight. Dennis Gottman is going to be on for the full hour. And, of course, remember that you can get TFNN right on your cell phone, Tiger TV. If you've never checked it out, folks, it's a great system. We have great technology. You're going to get HD quality video and audio delivered right to your phone. Let's go over and take a look at the XLE. So you have the oil contract down a couple dollars. You have the wide price spread. You have the accelerated volume. The XLE made it down to a low today of $65.34. 19 million shares traded. This also took a B point out of the $66.37. Now, the difference here is that it's a toss-up whether it really was really an ABC down. The reason being is that we had come down with volume, but yesterday when it popped up, it had volume on the way up. So realistically, looking at that, I'd say it's not an ABC. Now, it gave it up on price yesterday, but what this has done today, you got to lower price. Bottom line, this wants to go down into the swing low from the 9th of May, which is 63.50. And this also has that high volume swing low that's laying out there on the from the 20th of January, which is $52. So big number, man, big number. The XLF, we go to the XLF, we take a look at the XLF. XLF is an ABC down, confirmed ABC down. What the XLF did is this. Your B point on the XLF is $22.54. You did 54. Check this one out. This is a good one. 54.3 million shares. We broke it with 54.6 million shares. It closed over the B point, which makes a complex ABC structure on the way down. That being said, guess what? This baby wants to make a run down to the 2185 area. That is the swing point from April 7th, and what is also sticking out like a sore thumb is this $19.88. What you're going to want to be doing is watching the Germany market, the DAX, in a huge way, folks, because the DAX did break down, broke the swing point, all of the above. I suspect we're going to be making our way down into that area. Transports, we go take a look at the transports. The transports out here got down to a price point today of 7,440. It did reject that lower price out there, and I don't get the volumes until later tonight on this. So we'll see where this transport does shake out. But right now, it looks to me like 75.46. That's where we're at. We've been at here for quite a while. What we do have in the transports is that also has that high volume swing low from the 29th, the week of the 29th of January. And those, by the way, are all over the place. That's how they're shaking out right now. Some of the other Dow stocks out here, well, this is what you have today. You had Boeing down 79 cents, ExxonMobil. Let's go look at ExxonMobil, actually, because ExxonMobil is up $1.06. So ExxonMobil, this is cool. So if you're a candlestick charting person, right, if you're a candlestick charting person, you know that it's not bullish. If you're just looking at a chart, though, this would look bullish. And what it is that you got to a low of $89.11, and then you closed up $1. You closed at 91.22. That symbol there, though, folks, is a last engulfing. A last engulfing is that after an uptrend, you open lower, you close higher, you take out as many days as you take out. And the amount of days that you take out, meaning engulf, will tell you just how powerful this is. Now, this symbol here took out, about 10 days, 4 or 5, 7 days in trading. When you get a pattern that's set up like this, you need something to close under this, and you need it tomorrow. So we'll see where this does shake out tomorrow. Chevron, we take a look at Chevron. Chevron got to a lower low, 98.77, and we did have an expansion of volume. Chevron wants lower price also. Oxy, let's go take a look at Oxy out here. So Oxy would need more volume. Oxy didn't hold price. Occidental didn't hold price, but it did trade into lower price. If we go over, take a look at J.P. Morgan and the financials, because there's no doubt the large banks, they're going to have a problem making money with the way bonds continue to trade. What we did have out here is that J.P. Morgan, the volume was actually a little light with J.P. Morgan. It did 16.7 million versus the 19 million, so you can get a bounce in J.P. Morgan. American Express, AXP rather. Oh, this is a big ABC down. This is American Express is a big problem. Let's look at this a little bit longer. Yeah, American Express, there's a lot of people getting in American Express's business these days. This is off a high of $96. You're at 61. You have the high volume swing low at 52. American Express can be in big problems. We'll see how it hits the 52, but what is wide open also, you hit that 52 at volume, you go to 35. And the American Express deal, there's just so many different credit deals out there right now that, bottom line is that I think the cachet of that American Express card has been gone for a long time. There's a black card out there, I believe, that has no limit whatsoever. But guess what? There's only so many of those cards that they can give to people. So I think in the larger run, they got to figure out a different game plan. Let's go take a look at good old Amazon. Says Amazon is still the king of retail. Amazon is still hanging out here at this $717. We bring this back. The longer that it stays over $696, the more chance that it has to really get to a higher price. So this Amazon deal is pretty intense. There's no two ways about that. We go over to Google and we take a look at Google. Google is having some problems. Now this is going to get interesting with Google. Google was down $8 today. Google, I would say that because of Facebook, because of many other apps that are out there, Google looks technically that it has some problems. And fundamentally, you can make that case. So Google's trading at $710. The next stop on Google looks like $674. I'm in Duffy, and the den wants to take a look at GDX. Now, GDX, folks, is the VanEck Market Vectors gold miners. This had huge price spread out here today. The high was 27. It closed out at 25.48. And what we had is that, let's see. So we did, oh, this is good. This is good. Okay, so check it out, folks. You got to a higher high. You have the volume. This also is an ABC up. This is an ABC up. I'll go through that projection when we come back. This is Tom O'Brien. This is TFNN. Don't forget, folks, I'm going to come back for another segment, but our man, Mr. Andy Heck's going to be coming back. Great guest tonight. Check it out. TFNN.com on your cell phone. Hit Tiger TV. We're going to be right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
Join Andy Hecht as he shows you how to make money in commodities. The Commodities Hour, next on TFNN.
Welcome back, folks. We're talking about the GDX. So the GDX, folks, bottom line, if I put this on a weekly, you're going to see it's taken its B point out, has the volume on the deal, and it's a monster ABC structure, too, just as the GLD is. So your price structure... now, this is a longer term, but your price structure on the GDX is 45. You're at 25 right now. Your swing point is at $26.17, 489 million, and 489. Well, actually, we have to wait till tomorrow. But if we got 350, 450, 4, oh my God, it's going to be a close call because it looks like it's going to do about 475. We did 124 million today, and it's going to need 489. So we'll see where that shakes out tomorrow. But if it gets that volume, that's where that's going. That's on a longer term basis. A shorter term, what you have is this: we did 124 million shares today, which was taking out the swing point that had 68 million as well as 84 million. That level there, there's a smaller ABC, which is 19 is your A point, 26 is your B. I'm ballparking this, so you get $7. That gives you $28, and right now we're $24.97. $28 would get you up into the swing points that were established out here in March of 2014. Bottom line is that what I expect you're going to see tonight, you're going to see more volatility across all these markets, folks. Particularly, the Asia markets are going to open. Australia are going to open up. What you're going to see out here, if we go over to the Hang Seng from last night, Hang Seng came down hard last night. It came down $400, and as we came down, you had that expansion of volume. The Hang Seng is at 20,038. That wants to run down to 19,600. The Nikkei in Japan, what we had with the Nikkei in Japan, that came down 485 points. That also had volume. Now, the Nikkei in Japan, folks, is at 15,430. That is into its February swing point. So that's crucial to, these are one world markets. So Japan is the first one that got down into it. And you have volume. So the way that the Nikkei is trading is that saying tonight it's going to go to 14,800. Last night we went down 485 points. you could make a case that our market spinning back might save them. Yeah, you can make that case. If that happens and it bounces, we'll see what the volume is. The way that's set up right now, though, my take, guess what? We're going right after that swing low. Now, that's a heads up in itself that these markets are on the way back down into the lows that were established out here in February. If we go over to the Shanghai market in China, what we have is this. That's just bouncing along the lows. And you got to remember, there's still restrictions in China. It's not even like that's a market. And they have so many restrictions, and that still can't get out of its way. And the restrictions I'm talking about, folks, they're not letting people sell the shares that they own. So Shanghai still, from year to year, has come down from 5,100 to 20. It was June 15th of last year. It was at 5178. Right now we're at 2872, and that is with restrictions that if you're a large owner of shares, more than 5%, you cannot sell them, period. They had a 6-month moratorium on it. Now it's longer, and they're not saying when that is going to happen. So it's pretty intense when you start wrapping that whole deal all up. Stay right there, folks. I'm Mr. Andy Hex. Coming up next, right on your cell phone, TFNN.com, hit Tiger TV. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it, take ownership of it, and fly with it. Everything you need is right inside you, folks. Go have a blast with it. Thanks for being here. Stay tuned for Andy, and I look forward to speaking to you tomorrow morning at 8 o'clock. Go get them, folks.